It's how the market has to work, folks. It's the law of supply and demand. Now the difference is, the skill that comes into trading is, if you do go long above this high here, and you're long, okay, and the market starts to turn around, the difference here, and this is something I want to make very clear, on some of the daily videos I've talked about how if the market pushes above or gets me in, and the next 15-minute bar immediately closes down, I want to get out. And that's a good general rule. And I want you to look at the difference here. Let me zoom way in. Here was the trigger bar. Okay, this was the bar that I was keyed in on, counting back 1, 2, 3. There's the long point. So here's the trigger bar. So I'm long. Look at this. Does the next bar close down? No, it actually closes up. So there's a higher close than the prior bar. So at this point, I'm not concerned that the momentum has died off. On this bar, yeah, you know what? Let me see what happens here. What does the market do? It pushes down, comes back up. Next bar, pushes down, comes back up. On this bar, admittedly, I might be concerned whether or not the market is going to break down. But if anything, what can I do? I can move my stop to break even. I can take some profit off of the table. Okay, and actually, I haven't measured it out yet, but I do believe that this is one where it got into profit very quickly. Yeah, so there's 19 pips on the bid. So it almost gets to the point where I can get out of the position. But the key is observing what the market is doing. The market did not close down on the very next bar, which indicates to me that momentum is still present. We're well inside of the sweet spot now. The London traders are moving the market. They're trying to get out of their positions. They're trying to get home or get to the pub for the night. So they're trying to work this particular market. So I want to observe, what are the bars doing? They try and push it down. Even here, they try to push it down. But they couldn't. So at the very least, okay, so I move my stop to break even. I'm not going to lose any money. And you know what? I don't know if the market's going to go up. I don't know if the market's going to go down. But I can protect my capital based on logic and common sense. The momentum continues after the initial thrust. The sellers are not able to push the market down. They can't push it down past my entry, certainly, so I can hang on to the position. Okay? And then you see here, this is when the market finally pushes into profit. You can see here it does manage to retrace all the way back down to break even. So depending on your strategy, after you get out of the initial position, moving your stop up to break even would have taken you out on the smaller portion here, giving you the opportunity to exit the market. Now, the other part of this of trading is that the market can sometimes do this, where it comes back down to the break even, comes into support, and then pushes right back up. Here's the key. You're outside of the sweet spot. Here's 1230, right there. So what happened? Right at 1230, pushes the market up, the market then reacts back down. I'm not looking to go long on this thing right here. It's outside of the sweet spot. Why would I want to do that? The London traders are gone for the day. The New York traders are there. Most of the customer orders are probably in for the day. So they may be working them, but you're not going to see a big momentum move. In fact, you didn't. You saw the momentum move here. You saw the momentum move here. But afterwards, after the sweet spot is over, 1230, the market just sort of churns its way up. Now, there's a gap in my data. I do apologize for this. But you can see that the market just sort of meandered its way up there. Whoops. Let me go back. So, anyway, let me take a drink. I got myself riled up again.